Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar rebounded away from the key levels around 66.30 and 65.80 and from there has posted significant gains that could see further to the top side towards 67.40-45, a key level that has held for a few weeks. The weakness came as its rival, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, hovers around a 2-month low of 104 figure 10. In light of the technical pattern, the market has rebounded to a bullish case and therefore should find downside attempts limited. And furthermore, expect to see eventually a break of 67.40-45 and lead on to 68 cents. Euro dollar put in a modest bounce as the dollar index slightly weakened as traders reacted to a softer US labour report following the release of the private payroll data from the Automatic Data Processing ADP, which revealed a slowdown in hiring to 152,000 jobs last month, significantly lower than the forecast of 175,000. Meanwhile, the annual wage growth held steadily at 5%, suggesting that the job market might be cooling. Traders are now on high alert as they will receive a heavy dose of economic data, starting with the European Central Bank's meeting on Thursday, which is anticipated of seeing a 25 basis point rate cut. Then on Friday brings the US non-farm payrolls report, the most significant data release of the week. Forecasts predict an addition of 186,000 jobs increase from the previous month of 175,000, while the unemployment rate is expected to hold around 3.9%. While investors anticipate that the US Federal Reserve will maintain interest rates at its next meeting, there is still murmurs of potential rate cuts by the end of the year, adding uncertainty to the market. So let's see if any come earlier than the predicted September. Looking at the technicals, the support area still holding relatively well from 107.60.80 and minor 108.65. Could see further gains and push through the level of 109.25 and on towards 109.65.75. And with the top side target seen at 110.25.40. However, above 109.25, be on your guard as we could see some profit taking slowly emerge and therefore could give a bumpy ride for traders as the top side target may eventually be achieved. Any pullback, as I mentioned, likely to be shallow. Turning to dollar yen, the market exhibited initial gains Wednesday but ran into a bull trap as the market reached the area around 156.55.65 and encountered a heavy downfall. As the dollar index remains weak around 104, could see initial weakness now back towards the support area of 155.20 and maybe even lower down towards 154 or to the lower region of 153 and then 150 to 151. Overall, the technicals are bearish, so therefore any upside attempts should be limited. The British pound staged a rebound, driving a positive session on Wednesday as it cautiously climbed higher through profit taking remains a possibility. Continued demand is expected to underpin the ongoing bullish trend. Supported by the weakening US dollar, the upside target lies around 128.5 and maybe on towards 129. And with the broader target still holding around 130 to 131. Turning to gold, the market stays another significant bounce off that key level of 2,321 and clears the level of 2,352 to 5. Now puts me somewhat neutral due to the risks that the market may be caught short. And therefore a squeeze could see a move up to 2,386 to 89 before any downturn. Wrapping up with oil, we can see that the market found support around the bottom side of this range of 72.60.90, and from there the bounce has come through significantly well to support further gains on towards the region of 75.5. Now a break above there would give further scope on towards 76.5, so do be on your guard just in case that the bull run does extend, given the fact that the oversold case is now preparing itself for a potential correction. Well, that's a wrap. Thank you for joining me, and as always, look out for the Intraday report, and I hope you enjoy the great start to the day.